Welcome to the Explainer. Today, we're diving into something called Specialized Investment Funds, or SIFs for short. Think of these as a new chapter in investing, created by SEBI specifically for experienced investors who are asking, okay, what's next after mutual funds?
So here's our game plan for today. We'll start by talking about a very common problem that growing investors face. Then we'll introduce the SIF as the perfect solution. After that, we'll see how it compares to other options out there. And finally, we'll figure out what this all means for you and your own strategy.
All right, so to really get why SIFs are a thing, you gotta understand the problem they were designed to solve. It's this classic situation where you feel kind of stuck in the middle.
And here it is, the heart of the issue. You've probably been doing well with mutual funds, you've built up some capital, but you're getting hungry for more advanced strategies. The obvious next step seems to be something like a portfolio management service, or PMS. But then you see the price tag, often 50 lakh or even more, and it just feels like too big of a jump. So you're caught.
Well, SEBI saw this gap. They recognized that a whole group of smart investors were in this exact spot. So they introduced a brand new category to act as a bridge.
So a SIF isn't just a fancier mutual fund. No, it was built from the ground up to be that middle option. It's really for those of you who've graduated from the basics. You want more flexibility, but you're not quite at the level where you need that ultra high net worth PMS.
And this is where it gets really cool, because a SIF basically cherry picks the best of both worlds. On one side, it's a pooled fund, it's regulated by SEBI, so you get that familiar structure and transparency. But on the other side, it lets the fund managers use way more advanced tools, like making long short bets to profit whether the market's up or down, or using derivatives, stuff that's usually off limits for regular mutual funds.
This number right here, 10 lakh rupees, it tells you the whole story, doesn't it? It's a serious step up from your 500 rupee SIP. It's a clear signal that this product is designed for investors who are experienced, serious, and ready for something more sophisticated.
So to really get a feel for where the SIF fits, let's put it side by side with the others. We're going to compare it to the traditional mutual fund on one end of the spectrum and the high-end PMS on the other. Okay, first up, let's look at SIFs versus mutual funds. The two biggest differences here are flexibility and access. Mutual funds are fantastic, but they have to play by a pretty strict set of rules. SIFs, they have a lot more freedom, which gives the fund managers more tools and more strategies to work with. And that higher entry fee, it kind of acts as a filter, making sure everyone in the fund is on the same page.
Now, what about compared to PMS? Well, the key word here is personalization. With a SIF, you're in a pool with other investors, and everyone benefits from the same sophisticated strategy. With PMS, you're getting a totally custom, bespoke service, a portfolio built from scratch just for you. And naturally, that kind of one-on-one attention comes with a much, much higher price tag.
When you see it all laid out in a table like this, the progression is crystal clear. You can see how everything just scales up from left to right. You've got mutual funds for retail investors, PMS for the high net worth crowd, and smack dab in the middle, you have the SIF. It's the just right option, that sweet spot for the experienced investor who wants more firepower without the huge cost of a fully personalized portfolio. Okay, so we've gone through all this information, but the most important question is, what does this actually mean for you? Because understanding these categories isn't just some academic exercise. It's about actually mapping out your own financial journey to see what your next move could be.
A really good way to think about this is like an investment ladder. Most people start on that first rung with mutual funds, building up capital, gaining experience. As your wealth and your confidence grow, you might be ready to climb up to that second rung, the SIF. And for some, eventually, the journey might lead to the very top rung, or personalized PMS. Each step is just designed for a different stage of your life as an investor. At the end of the day, the goal here isn't to say one of these is better than the others. It's really to show you that there's a clear path forward. By understanding the different roles that mutual funds, SIPs, and PMS play, you now have a much better map for your own financial journey. So the only real question left is, which path is right for you?